Okay, today on TalkTickers, we're digging into Chunghwa Telecom's latest earnings. And look, I know what you're thinking. Another boring telecom report, right? Well, think again. This is actually a story about a quiet giant waking up, shifting from a simple utility into a digital powerhouse that's smack dab in the middle of the global AI boom.
Let's be real. When we hear telecom, our minds usually go to, well, stable dividends, maybe some slow, steady growth. Kinda boring. But what if the real story behind Chunghwa Telecom's latest quarter had less to do with phone lines and everything to do with AI? Yeah, you heard that right. It's a huge twist, and it's the key to unlocking what's really happening here.
All right, let's start with the big number. 56.73 billion new Taiwan dollars. That's what CHT pulled in for Q2 revenue. And you know, that's not just a little bead. Get this, it's their best second quarter revenue in 10 years, a whole decade. And the really fascinating part? It's how they did it. There's a new engine under the hood here, and it's starting to roar.
So that brings us to the AI-powered beat. Look, CHT didn't just squeak by expectations. They completely smashed them, even blowing past their own goals. Let's really dig into just how strong this quarter was.
So if you look at the numbers, it's pretty impressive all around. Revenue, up a solid 4.8%. But here's the kicker. Operating income grew even faster, at 5.2%. That tells you they're getting more profitable, which is always what you want to see. And for anyone trading the ADRs in the US, the earnings per share came in just ahead of what analysts were expecting. It's just a clean sweep, a solid beat from top to bottom.
So how did the market react? Well, it was interesting. The stock ticked up about 1.5%, and on pretty heavy trading volume too. Now, that's not some crazy rocket ship move you'd see from a hot tech startup. No, this feels more like, the big investors are slowly turning their heads and going, wait a minute, something's different here. The market is starting to wake up to this new story.
So you're probably wondering, where did all this growth come from? I mean, it wasn't just them signing up a few more cell phone plans. No, the real story, the thing that points to where this company is headed, is a total explosion in their ICT division. That's information and communication technology for enterprise clients.
And this is where it gets wild. Ready for this? A 27% surge in ICT revenue, year over year. Let me just say that again. 27%. That is not your grandpa's telecom growth rate. That is pure, unadulterated tech growth.
But wait, it gets even crazier. If you peel back the layers on that ICT number, you find their AIoT business, that's artificial intelligence of things, grew by a staggering 71%. I mean, wow. This is the stuff that connects everything, from factory floors to smart cities. It's absolutely critical.
And then, bam! Another hit. You've got the two absolute cornerstones of the whole AI revolution, data centers and cloud. Both of them grew by an explosive 40%. You have to remember, Taiwan is the heart of the AI supply chain, and that means they need a ton of data centers. CHT is literally building the foundation for it.
So you've got this incredible trifecta, right? AIoT, data centers, and cloud. This isn't just a side hustle for them anymore. This is the new core of the company.
And look, this is not some happy accident. Management was super clear on their earnings call. This is all part of a very deliberate plan. President Lin basically said, yeah, we're doing this on purpose. They are intentionally, actively building this new engine for growth.
Okay, so this ICT boom, it isn't just happening out of nowhere. It's actually built on top of this massive and frankly really cool long-term strategy they have. They call it Sea, Land, and Sky.
It's exactly what it sounds like, a three-part plan. Sea is all about connecting to the world through those giant undersea data cables. Land, that's their next-gen fiber network on the ground. And Sky? Yep, satellites. We're talking total coverage, from the ocean floor to orbit. When you put it all together, you get one seriously powerful and resilient network.
And this isn't just marketing fluff. We're seeing them execute on this like right now. They just fired up a new submarine cable, the SJC2. They're already investing in the next one. They locked down an exclusive deal for OneWeb's low Earth orbit satellites. They're even working with Japan's NTT on some seriously futuristic network tech. So yeah, they're not just making promises, they're actually getting it done. All right, so what does this all mean going forward? Let's check out their guidance, and then I'll give you our take in the next call. Well, management is feeling pretty good about things. They reconfirmed their full-year guidance for everything, revenue, earnings, the whole deal. Plus, they already booked record revenues for June and July. That tells you they've got some serious momentum carrying them into the rest of the year. Okay, so here's our prediction for the next quarter. We think this story has legs. That ICT segment is the star of the show, and let's be honest, the AI boom in Taiwan is not slowing down anytime soon. So we're calling it. Expect another earnings beat in Q3, powered by that same growth engine.
And the stock price? Look, we don't think it's going to suddenly double overnight. This is more of a slow burn. We're anticipating a gradual re-rating. As Wall Street starts to catch on and really understands this isn't just a phone company anymore, you're going to see that valuation start to climb. They're shifting from a boring utility to a growth story, and the stock price will eventually reflect that.
So our official rating on Chunghwa Telecom is a firm outperform. Why? Because they've successfully pulled off this pivot to digital infrastructure. They're executing flawlessly, and they're in the perfect place at the perfect time. It's a fantastic growth story, and we think it's going to beat the market.
Okay, before we go, let's have a little fun with an analyst's trade idea. This is the kind of thing you might hear pitched in a hedge fund meeting. A little bold, but makes a ton of sense when you think about it.
We're calling this one the Global AI Infrastructure Nexus Trade. The play is pretty straightforward. You buy Chunghwa Telecom, and at the same time, you bet against or short a bunch of the old, slow-moving European telecom companies.
So here's the thinking behind it. CHT isn't really a telco anymore, right? It's a picks and shovels investment in the AI gold rush, and it's sitting right on top of the gold mine, the world's most critical hardware hub. On the flip side, you've got these European telcos that are just stuck. They're tangled up in regulation, saddled with old tech, and their transformation is happening at a snail's pace. So you're basically betting on the gap between the future of digital infrastructure and the past.
So I'll leave you with this to chew on. As CHT keeps making this incredible transformation, ditching its old, slow utility model to become a genuine digital powerhouse, can we even call it a telco anymore? Or are we watching in real time the rise of Taiwan's next great tech titan?
And that's our breakdown for today. Of course, just a friendly reminder, this is not financial advice. Always do your own homework before making any investment decisions.